Are you tired of being turned down for a loan or a credit card because of your low credit score? A good credit score can mean the difference between you getting approved for the things you need, like a new apartment, car, or even a job. What if I told you there's a secret to unlocking a better score in just a matter of weeks? In this video, we'll dive into what hacks and tips credit insiders use to increase your credit score, reveal the key factors that are impacting your credit score right now, and share 2 crucial pieces of information you need to know about your credit score in 2023. I know you work hard for your money, so that's why I'm going to share what the credit improvement experts charge thousands for. And everything you need is for free in the description below. So sit back, relax, and get ready to boost your credit score. Let's go. Your credit score is based on 5 factors. How good are you at paying your loans and credit cards back? How much do you owe? How long have you had your credit? The mix of types of credit you have, and new credit accounts. All these factors make up the 850 points of your credit score. Payment history, or how good are you at paying back your credit or loans, is the most important factor. It makes up 35% or 298 points out of the possible 850 points. A single missed payment can bring your credit score down by as much as 100 points, especially if it was recent. Or if you've had an account go into collection, then your credit score could be hurt as much as 150 points, even if you pay off that collections account. So there's a right way to do it. So first, if you have a missed payment, don't worry. You can quickly boost your credit score by following these steps. First, make sure you're caught up on all your payments. Then, write a goodwill letter to your lender to explain the situation and show how you've changed. This could result in a late payment being removed from your credit report, potentially leading to a 50 to 100 point increase in just 30 days. Check out my step-by-step guide on how to write a goodwill letter and use the included template in the video description below. Now, if you have accounts that have gone into collections, you have 2 options to improve your credit score. First, if the collection account is inaccurate, you can dispute it. This means you can ask the credit bureau to have the creditor investigate and see if the item is inaccurate. If it is, then it must be removed in 30 days. This can result in your credit score increasing by as much as 120 points in 30 days. Your second option, if you have the money to pay off or settle the debt, you can negotiate what's known as a pay-to-delete agreement with your debt collector. This means you pay off the debt and the collector removes the collections from your credit report. This can improve your credit score by as much as 150 points in as little as 30 days. I did a step-by-step video on how to do a pay-to-delete. I put that in the description below, along with the dispute template and pay-to-delete template. Credit utilization is a factor that makes up a significant portion of your credit score, accounting for 255 out of the possible 850 total points. It measures how much of your available credit you're using each month. So for example, if you have 2 credit cards with a credit limit of $6,000 and $4,000, and you use that credit card and carry a balance of $3,000 and $1,000, your overall credit utilization ratio is 40%. To improve your credit score, it's best to keep your credit utilization below 30% each month. One hack to keep your credit utilization below 30% is to pay down your credit card balance before the credit card company reports it to the credit bureaus each month. You can find out when your credit card company reports to the credit bureaus by bringing up your latest credit report and looking for the report date on it. Then, make a payment before the date to bring your utilization below the 30% mark. The goal is to keep your credit utilization between 10 and 15% to boost your credit score. Remember, you should aim to pay down your balance each month to avoid paying extra in interest, especially in 2023. Finally, let's cover the items that make up the remaining 45% of your credit score. Your credit history, which makes up 15% or 128 points of your credit score, is how long you've been using credit. Keeping old credit cards open, even if you don't use them, can help you boost your credit history. So if you've got a card that you just paid off, don't close it. Make sure you keep it open, but cut up the card, freeze it so that you just don't spend on it any longer. This helps you with your credit utilization too. Another option is to become an authorized user on someone else's credit card. But this could also potentially hurt your credit score if they don't make their payments on time or if they have a poor credit history. Next is your credit mix. It's the variety of types of credit you have, and it makes up 10% or 85 points on your credit score. Creditors like to see that you can handle different types of credit, not just a credit card. You can improve your credit mix by getting an installment loan like an auto or personal loan, but be careful. because not all the loans you take out will be counted towards your credit mix, like buy now, pay later or payday loans. An easy way to improve your credit mix is to get a credit builder loan, where you make a payment to a savings account and build up your credit history and a loan to show for it. You can find 0% credit builder loans online, and a shameless plug, Cambio, the company that I founded, even offers one. Check out the description for more information. Last, having too many new credit accounts can have a negative impact on your credit score, and it accounts for 10% or 85 points out of the possible 850 points. Really, you can do two things to help improve this factor. Limit new credit card applications, so every time you apply for credit, it creates a hard inquiry on your credit report. Try to limit the number of new credit applications you make in a given period of time so there aren't too many hard inquiries on your credit report. Second, wait between applications. If you need to apply for credit, try to space them out so that you have applications over a period of time. Now, before I share two crucial pieces of information that'll change the way that you look at your credit score and your credit report in 2023, let me ask you this. Are you ready to join a movement to raise America's credit score by 1 million points? If so, hit that like button and subscribe to be a part of the journey. And don't forget to check out the description for more information on this anonymous community that we're forming to grow America's credit score by 1 million points. And to be a part of the community, it's free. Now, onto the two crucial pieces of information I want to share with you about your credit score in 2023. First, there's a game-changing update coming to how medical debt affects your credit score. Starting in 2023, medical debt under $500 will no longer be reported on your credit report, thus not impacting your credit score. So if you've got medical debt, regardless of amount, check out the video I did about this new change and protect your credit score. Second, I know there's a lot of videos about hard inquiries and how much of an impact it has on your credit score. The reality is, a hard inquiry only impacts your credit score for about 6 months from the date of the inquiry, and it falls off of your credit report after 2 years. If you have multiple hard inquiries, be sure to watch the in-depth video I did about hard inquiries in the description below. That's it for now. Thanks for watching. If you've got questions, put them in the comment below. Until next time.